welcome to this Bell Direct weekly update. I'm Julia Lee, an equity strategist at Bell Direct. Well, the last week has been a positive one for the Australian share market with a gain of just over 1%. The best performing sectors have been the banks as well as the property sectors, and the worst have been utilities and the technology shares. Having a look though, and just over the past month, some of the shares that have come under pressure are those battery material companies. We've seen Orocobre down 21% for the month. We've seen Pilbara down by 16% and Galaxy down by 15% for the month. So let's start off with Morgan Stanley and its battery materials check. It says that prices are down. In fact, if we have a look at cobalt prices, down 30% from the mid-March peak, and China's lithium carbonate price down 41% in the same period. Part of that is that China's electric vehicle output fell 10% month on month in June, and that's a sign that the removal of subsidies is driving some output cuts over there. But China's fall in lithium price is yet to hit the US, and a rebound in cobalt less likely as the market moves into surplus in 2019. So the outlook for some of these battery materials is looking soft. From battery materials to looking at the Australian super and advisor landscape, Bell Potter is saying that since April, it estimates around about 100 advisors per month have been shifting to smaller independent outfits. The trends are negative for the old model of some of the large integrated players being AMP and IOOF, and the remaining major bank wealth businesses as they struggle to hold on to their existing advisor numbers. Instead, they see the recent pullback being a buying opportunity for Netwealth, OneView as well as Premium, while AMP and IOOF fail to impress. Having a look at Value Host, and this is an interesting one. They're having a look at Japan, and Japan's 12-month forward earnings forecasts are at a record, up by 19%. So Value Host is overweight Japan with holdings in IJP, which is the iShares MSCI Japan Exchange Traded Fund ETF, and PIXX, which is a Platinum International Fund. Economic data, it says, is pointing to an acceleration in wages growth, which is a key precursor to a break out of deflation, which would be a positive for markets. The Bank of Japan remains ultra accommodative, and the forward PE for the market of just 13 times makes the Japanese market look undervalued. Let's have a look at some more countries, and Macquarie looking at India versus the Philippines, saying that both consume too much and invest too little, and hence there's vulnerability to current account as well as FX crises. Both suffer from a lack of infrastructure, and that causes inflation bottlenecks. And as global liquidity tightens and reflation slows, neither is well positioned to attract foreign deposits and investments. But both have ample domestic liquidity, and saying that India and Philippines face similar risks, opportunities, as well as the success formula. Rising twin deficits and inflation, though, threaten growth, and the answer to that is structural reforms. Reforms, though, have stalled in Philippines, and hence they are underweight the Philippines, but they are overweight India, saying there are more catalysts in India. Moving on to Morgans and their balanced portfolio, and not a huge change here given that they're pretty comfortable with their portfolios heading into reporting season. But with the balance and the growth portfolios, they are watching stocks for potential accumulation or review. And some of the stocks they're watching here include Rio Tinto, Commonwealth Bank, Telstra, Ramsay Healthcare, Pendal, ALS, as well as Link Administration. In property, it prefers the Aventus Retail Property Fund, which has an FY19 distribution yield of 7%, some good organic growth available, and also acquisition activities in a highly fragmented market. Other preferred property players include Viva Energy REIT, which owns a portfolio of 438 service stations, as well as Centura Industrial REIT, which is an exposure to Australian residential property and a distribution of 7.9% paid quarterly, which looks pretty attractive. Of course, reports will be very much in focus in the coming week, and there's a big calendar of events ahead. If you want to check out a more detailed calendar, please go to the Bell Direct website. But some of the ones we'll be watching on Monday include Bendigo and Adelaide Bank, BlueScope Steel and JB Hi-Fi. On Tuesday, we'll be watching Challenger, Domino's, Whitehaven Coal and Cochlear. On Wednesday, we'll see some of the biggest stocks in their sectors reporting, including Computershare, CSL, Wesfarmers, and Woodside Petroleum. On Thursday, we'll be watching QBE Insurance, Telstra, and Origin. And on Friday, we'll finish with Goodman Group, Kogan, as well as Link Administration. So it's sure to be a busy week for the Australian share market, with earnings very much in focus. But this week, we close off the week with a positive return, with the banks leading the returns on the market. I'm Julia Lee, an equity strategist from Bell Direct. Hope to see you next week.